In the early days, NFTs were mostly known for digital art sales and headline-grabbing auctions. But in 2026, NFTs are no longer just about profile pictures or million-dollar JPEGs. The technology has evolved into something much bigger. Today, NFTs are being used in gaming, real estate, ticketing, brand loyalty programs, and even identity verification. Major companies, gaming studios, and blockchain platforms are integrating NFTs into practical systems that go far beyond collectibles. The conversation has shifted from how much did that NFT sell for to what real utility does this NFT provide. That shift is transforming industries in measurable and visible ways. If you want to understand how NFTs are actually being used in real life in 2026, not hype, but real utility, stay with me until the end. NFTs in gaming, true digital ownership through immutable. One of the strongest real-world NFT use cases in 2026 is gaming. A major example is Immutable, a blockchain gaming company that powers NFT infrastructure for Web3 games. Immutable works with gaming studios to allow players to own in-game assets such as skins, weapons, and characters as NFTs. Unlike traditional games where items stay locked inside the game publisher's system, NFT-based assets can be traded or sold in open marketplaces. Games built on Immutable's platform allow players to maintain actual ownership of digital items. This means your rare sword or character skin isn't just a rented digital file. It's something you control in your wallet. Gaming companies are exploring NFTs not as speculation tools, but as digital property systems. Video content explaining Immutable's technology and NFT gaming ecosystems is widely available online, showing how the infrastructure works in real time. This shift proves NFTs are becoming part of serious gaming economies, not just collectibles. Epic Games and mainstream gaming integration. Another important development is the role of Epic Games, the creator of Fortnite. Epic Games has publicly allowed blockchain-based games in its store, opening the door for NFT-powered titles to reach mainstream gamers. This is significant because Epic is one of the largest gaming distribution platforms in the world. By permitting NFT games, it signals that blockchain integration is no longer considered fringe technology. Instead of hype-driven speculation, developers are focusing on interoperability, allowing players to move assets across ecosystems. NFTs can represent characters, cosmetics, or in-game land. This real-world move by a major gaming company shows that NFTs are gradually blending with traditional gaming models, making digital ownership more accepted and normalized in the industry. Real estate tokenization with Propy NFTs have also entered the real estate sector through companies like Propy. Propy enables real estate transactions to be recorded on blockchain and, in some cases, represented through NFT ownership structures. Instead of lengthy paperwork, property transactions can be processed digitally with blockchain verification. In earlier implementations, Propy facilitated property sales using NFTs to represent ownership rights, streamlining the transfer process. This doesn't mean houses are cartoon NFTs. Instead, NFTs serve as legal wrappers tied to real property transactions. This creates faster settlements, lower administrative friction, and global accessibility. There are documented real estate transactions available online that demonstrate how NFT-based transfers work in practice. This proves NFTs are evolving into tools for secure ownership documentation, not just digital art speculation. Nike and NFTs for brand utility. Major global brands have also embraced NFT utility. Nike launched NFT initiatives through its digital division to create blockchain-based digital collectibles tied to real-world brand experiences. Rather than just selling art, these NFTs provide access to digital sneakers, exclusive community experiences, and brand loyalty engagement. NFTs act as access passes, not just assets. This shows how brands use NFTs to strengthen customer loyalty. When NFTs unlock perks, exclusive merchandise, or community benefits, they move from speculative tokens to functional digital memberships. Video coverage and brand announcements confirm how traditional companies are integrating NFTs into real consumer ecosystems. Ticketing and event access through NFTs, NFT ticketing, is becoming a practical solution for fraud prevention and resale transparency. NFT-based tickets reduce duplication and fake ticket scams by verifying ownership on blockchain. Several entertainment and music events have experimented with NFT tickets, offering fans digital souvenirs alongside entry access. Unlike paper tickets, NFT tickets can remain in a user's wallet as permanent proof of attendance. This use case solves real-world problems: scalping, counterfeit tickets, and unclear resale chains. Blockchain verification adds transparency to the process. The shift from speculative NFT art to utility-driven NFT ticketing demonstrates how the technology is maturing into infrastructure rather than hype. Identity verification and digital credentials. NFTs are also being tested for digital identity verification. Instead of sharing sensitive data repeatedly across platforms, NFT-based credentials can verify identity or qualifications without exposing full personal details. Educational institutions and blockchain startups are experimenting with NFT diplomas and certifications. These credentials are tamper-resistant and easily verifiable. In 2026, identity remains one of the biggest cybersecurity challenges. NFT-backed credentials offer a way to verify authenticity without centralized data storage vulnerabilities. This represents a move toward blockchain as verification infrastructure, not just collectible markets. NFT loyalty programs in retail brands are experimenting with NFT-based loyalty rewards. Instead of traditional reward points, NFTs can function as tier-based access cards that unlock discounts, special events, or product drops. These NFTs are transferable and trackable, making loyalty systems more transparent. Blockchain ensures authenticity and prevents duplication. This use case demonstrates that NFTs are evolving into digital membership systems rather than speculative collectibles. The evolution from hype to infrastructure. In 2021, NFTs were driven by speculation. In 2026, the narrative has changed. The focus is now on infrastructure, ownership, and digital verification. Gaming, real estate, retail, ticketing, identity systems – all these sectors show NFTs becoming embedded tools rather than trendy collectibles. The market may not look like the explosive hype cycle of the past, but it is more mature, utility-driven, and industry-integrated. That transformation is the real story of NFTs in 2026. NFTs are no longer just digital art experiments. In 2026, they represent ownership systems, access tools, financial instruments, and infrastructure layers powering real industries. From gaming ecosystems to property transfers and brand loyalty programs, NFTs are steadily integrating into practical systems that solve real problems. The hype may have cooled, but the technology has grown stronger. That's all for today's video. If you found this breakdown useful, make sure to subscribe for more real-world crypto insights. Comment your thoughts below about where NFTs are headed next, and share this video with anyone who wants to understand the future of digital ownership. Thanks for watching. Have a wonderful day.